Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
G'day, how you going? Phil Tarrant, co-host of Property Investing Insights with Reshmi and Victor Kumar. Hope you're well. Hope you're dialed in, strapped into the Christmas party season. I know I'm already sick of going to functions and cocktail parties and eating fancy steaks and drinking red wine. All I would do is lock myself in my office in front of a spreadsheet looking at my property portfolio. But alas, I don't get the opportunity to do that. Thankfully, I've got people around that help me with that, which is pretty good. But I've been thinking about what property's going to look like for 2025, planning my approach over that period of time. And I'll talk about it on this podcast as well, along with Victor and Reshmi. But much like everyone else, there's a whole bunch of reasons why I never get around to what I want to do in property. I am the master of excuses, and no doubt that's probably echoing with a lot of people who see the world the same way. There's always some obstacle I've got to overcome or some hurdle I've got to jump over. You're not alone. Everyone goes through it, particularly those who have been investing for quite some time. So I really want to break that down a little bit today, maybe sharing my experience as well as Reshmi and Victor as they've crafted a considerable portfolio, but importantly working with Australians all over the place, investing in property, helping them create wealth. They've probably seen it all. Maybe. Victor, Reshmi, how you going?
Good, thank you.
Is there anything that you haven't seen yet?
I haven't seen you yet.
The unknown unknowns.
Yeah, the unknown unknowns. I haven't seen you yet doing a reno.
No, you haven't? Yes, you have.
No, I haven't. You pretended to work.
There is video footage.
I've seen the videos.
On site property investment, me renoing, like doing all the work, and this is back in the day. And sorry, just before we come on air, we're talking about the good old days of property investing, and it seems to have sort of picked up a different tempo of late. The good old days, the halcyon days of property investing, the nostalgic days of property investing, when you used to get in there and manufacture equity and try and spend 20 grand to make another 50 or 60. It feels like those days behind us.
Certainly.
I feel like they're still there.
Yeah.
It's just if you're not looking in the right places.
But the whole mantra about like, let's buy this place, let's spend this money on it to get it up to the standard. It just that narrative seems to have sort of gone a bit.
It has disappeared, and it's probably because the numbers are a lot more robust now in terms of, okay, your entry price is significantly higher. So for someone to get in and start doing that, they need to have that cash behind them. And also, if you look at, especially now with the way employment is, trades are very, very hard to find. But they are there. But you've got to ask, is it worth the effort in today's market? Unless you're doing a much larger renovation and playing in a much higher price bracket, where it can be a little bit more forgiving, whereas the margins may be very thin in the more affordable properties.
So I don't know if there's a fair comment or not, and I'll ask for you guys to consider it. Are the days of manufacturing equity through cosmetic renovations behind us? And by that I mean now the market does the significance of the heavy lifting rather than trying to tart it up with a coat of paint and some polishing some floors.
Yeah, it's the seasonality of it. So things come into season, things go out of season. And it comes back to whether it actually makes sense to manufacture the growth and not let the market do the heavy lifting, or to actually let the market do the heavy lifting. And it also comes back to your age as well, right? When you're actually starting investing, when you're trying to rationalize your portfolio, if you are a little bit more advanced in age, just like yourself, sir, we would want to move the needle ourselves, as opposed to if you're starting young, let the market do its thing.
Yeah, it's normally the inverse of that actually applies, because when you're young and you have less responsibilities, you start thinking about how you're going to spend your weekend. Because I have done many renovations, Reshmi, as you know, and I still do renovate myself. I'm doing a reno right now and still get my hands doing it. Not as dirty as what I used to. I'm more of a project manager extraordinaire and probably a nuisance to builders. I know enough to probably annoy them. When I say, they go, I do that, I do it this way, no, just jimmy it that way and whatnot. But I still really do enjoy it. But when I used to do renos, it was pre-marriage, pre-kids. Now I prioritise my time on the weekends, not to renovate, right? But you can still get it done. I know you've done how many between you guys?
A few.
You've done many, hundreds, I would say, if it's even including for your clients, maybe thousands of renos. So, but you don't know one end of a hammer from another. So,
Reshmi is a better nail driver than I am.
really, but that hasn't stopped you though.
No, it hasn't, right? So we need to understand that expertise can be bought, right? So finding the right person, but you do need to know the nuances of it. You do need to know the process of it so that you can then actually become, like you said, the project manager as opposed to being the labourer.
Yeah, and you need to be able to spot BS when it appears. And
Absolutely.
I think that's the key thing of a project manager is knowing what stuff costs. If you're going to sand and polish a floor, Victor, what's that worth these days, a square metre?
These days, it depends on which suburb you're talking. It starts from 2,000 upwards.
Yep. To do a whole house,
Three-bedroom home.
Yeah. And that smells about right. The further you get into the city, the probably more you pay. I don't know if I don't have to get those prices in Mossman, but
No. And in fact, I think Queensland's the most expensive place to do renovations at the moment.
so it's
followed by
seasonal,
Perth.
and then it's also, and that's access to trades and all that sort of stuff. So, this is not what I want to talk about today, but it's on a really good theme or thread of this. How do you know? You know when you get the thing coming through saying, there's maintenance requests at a property that you own, investment property. Something's broken, and you go, send a plumber or send a sparky or send a handyman out there. Well, this is what I normally say. If it's less than this much money, just fix it straight away. If it's over this much money, I need a formal quote. That's still consistent and current.
Still consistent.
But you need to know how much stuff costs.
Yeah.
So if a guy comes back saying, you got some problems with the power, I'm going to have to redo your switchboard for 10 grand, you're going to go, that doesn't sound right.
No. And you also need to take into account the time of the year as well. As we're recording, we're 5-6 weeks away from Christmas right now. Things tend to go up in terms of pricing significantly because they know you want to get it done before Christmas, and everyone, for some reason, for this one magical day of the year, they want everything done beforehand, and things cost twice as much.
They absolutely do.
Time pressure unnecessarily. Yeah.
Yeah. What I find, here's a hot tip for everyone tuning into this. I know Victor and Reshmi were subscribing to this. So just today I had someone come and quote for some, it's just a small apartment, just get some new blinds on it, right? Got two people to quote. One of them is a big sort of, you see them advertising on TV. They got shop fronts all over the place. I won't say who it is. And the other one is someone I know who I've worked with before and have done other work for me. Both come in today to quote. The guy who I know and I've done work for before and paid very quickly when he did the work. No worries, Phil. I'll make them myself. I'll install them on Saturday. The other mob, which is a household name and on TV, we're busy. We can't do anything until January of next year.
Yeah.
So love your tradies.
Yeah.
Look after your tradies. Little things like paying them on time, buying them a bacon and egg roll, getting them in a coffee, being thoughtful and kind and thinking about them goes wonders when you're a property investor and you're doing work.
Yep, and especially when you actually need them in a time like this, they will then bend over backwards because they know we've got history between the two of you. And equally importantly, they know that if they do the right thing by you, they get referred to other people. So sometimes it's quite okay to use a mum and dad company as opposed to a national company. But there are other times where the national company is a better deal because they've got the bulk buying power.
Yeah. And I think the pricing will be sort of consistent.
It would be. I mean, at the end of the day, apart from volume purchasing, the cost is the cost.
Yeah. And what we're talking about here is just doing renos because I'm in the middle of it myself now and I do absolutely still enjoy it, even though my involvement with it sort of has changed. The outcome that I'm seeking is still the same. But property investment is essentially just a game of chance in many ways, but it's a game of sequence, getting stuff sorted out, and along the way you're going to find hurdles and challenges in your way. That's the nature of the beast, and whether it's doing a small project renovation or it's managing properties or it's crafting a strategy to build a sizable property portfolio, you need to be comfortable with the idea of potential conflicts, both with yourself or the people you're working with and having your ideas challenged. But those people who are able to come across hurdles and obstacles and jump over them are those that are the best property investors. So that's really want to sort of shape today's discussion, because we've all seen it, and hurdles come in many shapes and sizes in property investing, depending on what you're doing and how you're doing it. You need to be aware when you see a hurdle in front of you.
Yeah.
Be very conscious about it. I think that's probably the important point, isn't it, Reshmi?
That's the main important part. You have to be aware and willing to work on yourself or work on those to be able to. That puts you a step ahead in towards your successful journey.
Yeah, I think it comes back to training yourself to make decisions. I think that's the biggest thing that someone that's starting off in investing, or even starting off in any venture, if they're not training themselves up to make quick decisions, they tend to overpay, or they tend to then be fleeced.
Yeah, and you need to be decisive in your decision making, and it's easy to be decisive in your decision making when you're experienced, but everyone starts somewhere and they're inexperienced. Right. So it's probably more of a mindset thing, or being comfortable in making decisions. And again, I would say you can make fast decisions even if you're inexperienced as a property investor by having sage counsel from people like yourself, Victor and Reshmi, and Right Property. They can help you do the heavy lifting to shortcut your decision making, because you're essentially buying someone else's experience to help with your decision making.
Absolutely. See, to be aware of your own shortcomings or what's going to hold you back, you've had to have done something over and over a few times to be able to realize that, okay, being self-aware, like, okay, this is why things are not working for me. And so who has got the time and the money to spend to gain that insight about their own selves, right? So to be really aware of all aspects of your life, see why things are not working for me, why am I not reaching a particular goal? It doesn't necessarily have to be a property goal in other areas of your life. So if you're aware about your own self and how you're dealing with the hurdles, that would be very helpful in knowing when you're doing a property portfolio. That's if you're aware of your own self, then you'll know where you can get help from other people's experience. So that's the first thing is, as you said, being aware. And that's where we pull on our experience.
And that's the consciousness in yourself that this is a hurdle or this is an opportunity, it's a challenge, and I can go outside and know where to go looking, and that's a skill in itself. But it's also giving yourself permission to be vulnerable.
Absolutely, yeah.
I think, and you hit the nail on the head, right? A lot of people don't want to ask for help or don't want to admit that they actually don't know because there's so much fluid information floating around at the moment that how a lot of people tend to become experts in inverted commas on different aspects of property investing, because all they're doing is regurgitating the information that's really available, but they don't really know the nuances of it and how it really operates and how it fits in terms of like a Lego puzzle, right? So where does this piece really go? And this is talking purely from a decision-making point, right? And earlier we talked about renovation. It's the tell in it is knowing that you do the floor polishing in the end after you've done the painting, not the other way around.
It's really funny you say that, because I had this debate recently, right, with the floor polisher, right, and he's like, and bear with me, and he's like, no, you've got to one trade would be like paint first, polish second, or polish first and paint second, and the painter's like, get it polished first because I'm going to have to come back and touch up all of the scuff marks that the sander's going to do on the skirting boards, right? And the floor polisher's like, mate, just get it all painted because they're going to wreck my floor when they paint.
Absolutely, they will.
And it's surprising you see it. And even if you get your best painters, right, they're going to.
There's still going
to be droplets, right? And when I recently did this, the floor was okay, but there was paint all over the place, right? And to the point is that the floor polishing equipment today is so good, the edges and stuff don't scuff
as much.
I didn't need to do any touch-ups at all, and I think it was probably a testament to the tradesperson I have. So, if you don't know, you don't know. But what I've found, and this comes back to sort of hurdles and obstacles, I don't know anyone. If you say, I don't know, or I'm unsure. Can you help me? Most people are inherently wired that they want to help.
Yeah, absolutely.
Yeah.
They want to help, whether they're paid or otherwise. They want to help. So this is this point about, make vulnerability a strength, making
Yes.
not knowing a strength, because you get the best outcomes, Reshmi.
You do. I think we all have our little egos, or, how can I ask, or I should know, or I am good at this, I cannot ask someone else. So, or I should be able to do this myself. We all have done this, and this is where you have to kind of let go of that and realize that there are people out there more experienced, and that'll save you a lot of time and money and a lot of pain going through when it comes to building a portfolio, finding the property, putting it all in place. So that vulnerability, you have to. It's a good thing to have to be able to let go of that ego side and open yourself up to ask for help.
Yeah. And just a different perspective to that, right? So often when I go out on the field and look at new areas, I'm dialed right in. I know the area like the back of my hand by the time I'm hitting the ground to actually look at properties in the area, to then put the final touches to that investing strategy in that area. But I go to the agents, even if they are wet behind the ear agent, or whether they are really seasoned agents, and I pretend not to know anything about property investing to begin with, and absolutely nothing about the area, even though I may have visited the area multiple times, because it's that one word, one sentence, and one different perspective that they bring that can make the difference between a good investment, a bad investment, or buying in the right street, as opposed to the not so favourable street in that area.
And that's a skill and an asset. And it takes people a long time to learn that.
Yeah.
And it may come with age, but I think it also comes as a capability builder, because what you're doing there, but people want to tell you how smart they are.
Yeah, absolutely. Yeah.
They want to show that they're more informed than you are. So, inverted commas, playing dumb. Like I've made a career out of it. Like really, you should always, it's the loudest person that's telling you all the reasons why they're the smartest person in the room is typically the person who's probably doing it toughest, right? So quiet people you got to think about. So just, what you're talking about there is extracting intelligence.
Yes.
That's what you're doing.
Yeah.
You're looking for the nuances of the ground truth to help shape your decision making.
Yes.
And you'd be surprised if you listen. It's exactly what we're talking about here is listening,
Listening.
active listening.
Yeah.
What you can glean and what you can pick up and how that can help shape and inform your decision. A lot of people aren't comfortable with just listening.
Yeah, and it's just not just the words; it's the tone as well that they use, and that gives you a really good insight as to their take on the area.
So looking at this at a sort of macro and micro point of view, and we're talking about hurdles and obstacles, and this could be significant hurdles and obstacles at a macro point of view as you shape and build out a portfolio, through to sort of micro stuff like hurdles and obstacles you may face doing a renovation, or my hot water system's broken. This is a hurdles and an obstacle. There's some sort of commonality to it all, which I think can help shape a better outcome. And thinking out loud around that, you would sort of be to put them into three sort of buckets. We could chat through these. One would be lack of clarity, can be an issue, which can really be a handbrake on your ability for decision making. It's inconsistency. Consistency is key. Then also external circumstances which can pop up when you least expect, which can sort of really get in the way of where you're heading. So let's kick off with that first point around clarity, Reshmi, and clarity of thought, clarity of thinking, clarity of mindset. It's all interconnected.
It is. Clarity, you get clarity when you've got your goals mapped out, and it's very hard. A lot of people don't operate that way with having their goals. It comes like around Christmas time. It's like, oh, this is what I want to achieve, or New Year's resolution. This is what happens. But overall life, when you look at it, the goals they have to be like those SMART goals. You really have to dig deep down what exactly you are trying to achieve. These goals have to be measurable and achievable in time bound. So it has to be tangible. So working on your goals and then like that gives you an idea as to it's like a blueprint that this is what you're trying to achieve, and never to beat yourself up if you don't achieve those goals in that time frame, because you have to just basically embrace those challenges that you face and keep going, have the focus there. And the clarity is, if you have those goals mapped out in a tangible way, really how it works with you in your own life, then you can flow better with your building your property portfolio. Let's say the journey is more smooth and you are in flow and in sync because you know your goals and you're going to go according to that, and you will reflect and reassess. And that's clarity comes from that. If you have it as a really broken down into clear, concise goals and with the action steps, and then you look at the different milestones that you've got to achieve. So everything. So from the major to breaking it down to little small action steps that you can tick off as you go.
Yeah, it's a really good observation, Reshmi. I guess what you're talking about there is the sort of architecture to help you achieve something. And you talk about SMART goals, which, to try and remember, specific. Yeah. Measurable. Actionable. R is
R is R.
T is time bound, right? T is time bound. But so what we're talking about there is SMART. Just Google it, SMART goals, and what that will give you a scaffold for how you go about approaching it. And that can be to do with big picture stuff
relevant.
Relevant. Big picture stuff with your life and where you're heading and how you're going to do it, all the way through to, something very tactical, which might be a renovation, right? You can still be, everything can be, based off that architecture for goal setting. And then what if you write it out and spell it out, and it's really, really easy. But when you sort of lose your way a little bit or you start to lack clarity, it's going to give you a hook to come back to and actually help you put you back on the right train of thought.
Absolutely.
One of the things we do when clients first contact us is we ask them the question, what are you looking to achieve out of investing, right? So what's your income goal? What's your time frame? What's the negative cash flow tolerance that you will have during that time frame? So that we can then formulate a plan towards acquisition for their portfolio to get them to that goal. We find that a huge proportion of potential clients that come to us, they seem to have this goal of $100,000 as an income.
It's a number's getting banded around all over. 150 seems to be the new number.
Yeah.
So for us, I think, take it back. It's like, that's not what I'm looking for when I'm looking for somebody to talking to somebody about their goals. I'm looking at what do they want to have in their lifestyle, and then look at what numbers will get them there. So
lifestyle goals, that's all the rage now. Lifestyle goals.
I think if it becomes really hard, start with one person's gross salary. Aim to replace that. If that's still harder, maybe you aim towards replacing 1 day's worth of gross income. Buy yourself a day. It then becomes a smaller bite-sized chunk goal. Gives you far greater clarity than this way out there goal that at some point in time I'm going to replace my income. At some point in time I'm going to get $100,000 out of my portfolio. Whereas if you got it down to 1 day's worth of income, and you just focused on that, buy yourself back that day. Now you've got to work 4 days a week, and keep dialing it back that way. It's a far more achievable process. It gives you far better clarity, because your clarity now is, I need to replace 1 day's worth of income.
Yeah.
And then a portfolio becomes shaped totally differently.
This is going to be topical, this comment, and I'd like to see your views on it. I reckon in this current market, it's nearly impossible for most people to replace their current income through residential property investment.
Not in a short time frame. Not in a short time. So
it will take you decades.
It will. So if you look at a standard property, if you bought a standard property starting off with a 3.5% yield to begin with, and you did nothing else, you just threw the money at it in terms of whatever the mortgage repayment requirement was.
Yeah.
Eventually, after 5 years, if you haven't refinanced, it'll turn into principal and interest. By year 20 is when it actually becomes cash neutral. to slightly
Year
cash
20.
20. Yeah, so 2 decades.
Yeah. Okay, so my flippant comment is pretty accurate.
Very relevant.
And that's without extracting equity.
Yes.
Yeah.
Okay.
Yes. So still retaining the same loan. Of course, you're assuming over here that the rents are continuing to climb, not in a linear fashion, but it goes through an upward trajectory. And you're also assuming that your interest rates through their various fluctuations is sitting at around 6.5%.
So this is a really important point because this is the big misnomer, I think, with residential property. I'm not saying it's not impossible to do it. Like you can do it, but you got to be really dialed in and super tactical and probably a bit lucky as well. But this mantra of like replace your income and replace your income, like that's okay. But I think in many ways it's shaping the narrative of what property investment probably is for most people to actually say today, I'm going to replace your income. Your income today versus the income that you might be on in 20. If you're 25 years old right now and you want to replace your income today, I tell you what, your income in 25 years when you're 50 should be a lot more than what it is. So you're either going to be horribly disappointed when you achieve your goal or your goal at the front end is absolutely realistic. So again, this is topical. Sort of a lot of people will say you need a strategy and you need a goal at the start and you need to go into – your goals are going to change all the time. Life's going to change. And we'll talk about external circumstances. Everything is going to change.
Yes.
So don't be disappointed when it doesn't work.
See, this is a conversation we were having at home with the number of properties obviously we've got, right? And I said, well, that's the reason why we wanted to have that many properties so that by the time it's getting to that level in, the income level that we really need, we've got it. So right in the beginning, we went really hard to get to that stage of gross rental because we didn't want to be at the end of like we've been investing for how long now? 25, 6 years.
Yeah.
So now we're not behind. We didn't set our goal for our income back then.
Yeah.
We had like massive, unachievable type income goal, which is not unachievable. It's very much achievable and we've kind of pretty much there.
Yeah.
So,
but be careful what you wish for because you might not want it when you get there. It might not be enough, might be too much, might be irrelevant,
I think
might be unattainable.
And there's truth in that comment, Phil, because
I don't want to be contrarian, but
no, there is like when you get to it, your problems become bigger.
Yeah.
Right. Your options, what to do and how to achieve, and the lifestyle you're taking, they become so diverse that it's very hard to make decisions at that point in time. Right? So you need to bring it back to, okay, if your income is here, this is the lifestyle you want. If you bring it back to that rather than pie in the sky stuff, it will be more tangible and therefore you'll have the clarity to actually achieve it.
See, it took me clarity. I don't have a goal. This, again, I don't have a goal on property investment. I don't know. Like,
property investing is just a tool. You'll use that money to get to what you want.
I'll work it out when I get there, right? But I don't have a number, and I don't have a step by step plan to get me to a point which is going to deliver me a number which I'll be satisfied with because the numbers change all the time.
It will change. Yeah.
Life changes all the time, and that number might go up and it might come down. Your life gets a lot more expensive, then it becomes least expensive, right? This is the natural bell curve of life. But the point is, you need a structure to support decision making. We spoke about SMART goals, and I think that's the key point.
Yeah.
And that will give you clarity of thought and clarity of capabilities, right? Like that should sort itself out if you stick to the process.
Yep.
Yeah.
Everything. But the key point is that you need to be consistent. And we spoke about this inconsistency point is where things come off the rail, and this is when hurdles and obstacles become insurmountable for many people, and they get stuck and they get put into a position where they've got to sell down or it stifles their growth as a property investor. And the way I view about this, and again, it's probably positioned in a way which is going to be uncomfortable with people. You need to think of property investment as attritional warfare. It's tough. It's a slog. You sometimes don't like it. It's going to be uber repetitive. And it's never going to go your way all of the time.
That's right.
No.
So, and I'm thinking there like attritional warfare, you think about the trenches of World War One, for example.
Yeah.
It's just the same stuff. You move an inch, you're back an inch. You move a foot, you're back a foot.
Yeah.
You move 100 metres, you're back at, like, it's attritional, and it's a strategy. You've got to accept that is in many ways the way it is, and you're not going to see immediate benefits in everything that you do.
That's right. And especially in the last probably decade, we've become used to the market always tracking upwards by and large, right? So there needs to be some strategic retreat. There is some forced retreat, and there are some unforeseen losses when you make in a prolific property investing your future. So this is where a lot of people will, as the market starts changing, as there's more artificial intelligence coming into the industry, there will be a lot of casualties that'll happen because of all of these moving parts. And for someone that doesn't have the clarity and doesn't have the consistency, so coming back and checking in with the portfolio, one of the most consistent things we do in our portfolio is that Boxing Day is between Boxing Day and New Year's is our portfolio planning for the following year.
That sounds boring.
It's so exciting. It's very exciting.
Do you sit there and sort of, it's formal and you've got a checklist, or you just sort of sit around and talk about stuff and Victor just muses and you just annoys you?
Bit of both.
Yeah, bit of both.
We do have a process. We do have a process.
There's a process.
And this is not just property, like we look at life.
And this is the consistency bit.
Yeah.
So, we've still got goals written and we've still kept them. I've got this book that's got goals written from all the way 25 years ago.
Yeah.
Right? And we've ticked off some that we've looked back and said, what were we thinking asking for that?
Were your goals unrealistic?
Some were.
Were they measurable?
Yes.
They were.
Yes, they were.
Yeah.
So, and this is something that we will touch on in probably the next podcast, so that people can use that as going into
their own
new
planning
year,
thing. Yeah, it's a good
in terms
idea.
of how to set those goals, the smaller steps within those goals, because everyone sort of glosses over, set realistic goals. There's an art and a science to it.
So this is important. I'm talking about, I'm going, I don't really have a goal and I just try and work it out and stuff. Like, you know me, I sort of know where I'm going, but I don't have a book of goals. Mm-hmm. Is that okay?
That's okay.
That is okay.
That's
You've
okay.
got some sort of a skeleton around.
I sort of, I know. But and feel free to share this or tell me to get stuffed. Is there one goal in the goal book where you've looked and just gone, this is just mad. This is just so far out of it. Like, we're bonkers even thinking about that. I might leave that with you and you can tell us next time when we, I think we should go through
I'll
it.
flick through the book and I'll come back in the next podcast.
Give us some real clangers, it'll be really good.
See, I don't know. Looking back
One
now,
says maybe one day I'll have a charisma. I'll have some charisma. Victor Kumar, right?
Oh gosh. Yeah. Well, one of the things I'm really happy about from those goals is the music. My music, my singing, all of that came out of that, because if we hadn't written that down, we wouldn't have achieved it. So that, for me, personal gain, that was a personal fulfillment. It takes money to do it, and you have to have that kind of money to, like, there's so many singers out there, but without the backing of the money.
And this comes back to consistency again, because property is a vehicle to create opportunity and choice outside of property, and that's what property is. People are going, I love property. Well, no, you like the outcome it gives you, and to you're able to correlate success by doing property well, and that's sort of having clarity and consistency, and how that translates into all the good stuff. That's probably how I'm more wired, rather than property is the process and the vehicle for doing it.
So if you look at the singing, and I'll use that as a segue, it was dialed into the property plan, right? So this is the money that the property portfolio will give towards singing. And it's not an inexpensive exercise, right? We're talking business trips to Bollywood, staying there in good hotels. So really glamping it up.
What sort of singing, like this Bollywood type stuff, is it?
Yes.
Really?
So for the listeners, if you wanted to go onto YouTube and
Can I
Reshmi Kumar,
really? Yeah. Okay. I you know what? Obviously, I haven't been listening. I didn't. Maybe I sort of knew this, but I didn't realise. Yeah. Is Victor in the background sort of rocking his Bollywood stuff?
I actually am in one of the videos against my better
I
judgment.
actually know this. Yeah.
This is 10 years ago when
Yeah,
we
yeah,
first
yeah,
did it.
right.
This was like, in the uncharted waters. You've got no idea how to do all this stuff. And so here we were we had to do the film and everything. And it was like, where do I find people? Where do I, so in one of the videos is there.
Very
It's a
cool.
B-grade movie.
Yeah.
When I'm in there. So, but if we come back to consistency, right? So that if I use that, there was the consistency of actually getting that those types of properties in the portfolio. So that there was goals of selling down a few properties as well to ease the debt burden in that particular portfolio. So with our portfolio, we've got portfolios within portfolios. So there's a cluster of properties that are for family emergencies, medicals, and we would to help the larger family. Then there's the education, there's the future, and then there's the discretionary bit as well.
Yeah. See, every time I catch up with you guys, it just reminds me I've probably got to do my stuff a bit better because I'm probably, I don't want to sound as though I'm not goal orientated or goal setting, but I probably haven't got it exactly lined up that way.
So you've
that's
got your
okay.
business as well, and you've got property. So you have to really look at what are you achieving out of both to be part of, like in your life, these are the two modes that is bringing you the income. So you have to just
They both contribute and they work well.
Yeah.
But, again, time is a great enabler when it comes to property investing. That's the market does the heavy lifting if you're investing properly. But time is also a finite commodity. You know, you haven't got forever to build growth and build wealth through property,
Having done it for over 25 years, let's say, for me, if you've got a good job, I think people should just, work, enjoy their life and let property investing happen in the background. It's no stress, no fuss, no rushing out, doing this, doing that. Because we've seen how market changes, how the gains you have over the years. So you'll get there. So there's no sense putting extra pressure on yourself to rush out and do all these. It should be something bite-sized and take it slowly.
And it's okay to go slow.
Yeah.
It's okay to go slow. And I think, again, people have got to give themselves permission to put things into perspective, because if you're interested in property investment and you're consuming a lot of information around it, what you typically hear is the small percentage points of people who end up building very, very large portfolios, which is difficult. It's difficult to do. It requires a lot of capital, all the stuff we've spoken about. So your version of, or your interpretation of what property investment can be for you, you've got to put that into perspective, and you've got to be fair and kind to your goal setting, because you just need to look at the statistics. There is very few Australian property investors who own more than 6 properties.
Yeah.
And if you're talking about income replacement,
6 properties may not cut it.
6 properties probably aren't going to cut it, and that's the small percentage points of certain Australians that actually have that many. So put your property planning into perspective.
Lots of peas there.
There's lots of peas with the right property group. But you got because otherwise you beat yourself up, and the worst thing about a goal or goal setting is never hitting it. You want a winning locker room culture. You don't want a negative locker room culture.
And at the same time, we don't want to set the bar too low either.
Absolutely.
So
This is where you need expertise and guidance, right?
There's this old saying, and years ago I used to do videos on New Year's Day for my Facebook friends, right? And I'd had this saying, if you are setting goals, shoot for the stars, because even if you fail, you'll end up on the moon.
There you go. Yeah. I like it. So this is all good. Good clarity, keeping consistent. That's all nice when it's fair weather sailing and the wind's behind you. One thing you're guaranteed is that, circumstances are going to change, and there's going to be external factors which can't do a lot about. Interest rates go up. Is one.
There's
Inflation.
big talk about interest rates going down. I think people are in for a rude surprise.
I've been talking about this, and I've been out there. There's no way in the world there's going to be a rate cut before May.
Now that you've got me on my soapbox.
And I reckon if we get one rate cut next year, that's probably good going.
Yeah, absolutely. I agree. So a lot of people, and it's easy to make predictions. And this is what we're talking about in terms of external factors. I'm going to wait until the interest rates are lower. There's a very, very strong chance that we may not get any rate cuts next year. Purely because if you look at the mechanics of it, the underlying inflation, which is the quarterly inflation figures, is not actually coming down. It needs to come down by 1%.
Yeah.
And for that to come down by 1%, where everyone's predicting about February rate cuts, for it to come down by 1%, we need to be in a recession for that.
Over a period of Christmas when people are spending dough.
Yeah,
That's right.
exactly.
Yeah.
But it's going to go reverse, right? Inflation, the underlying inflation for the next quarter will actually increase. And we're hanging our hat on the monthly inflation figures, which of course will bounce all over the place, especially at a time like this. And we're, oil prices, commodity prices, that all has big impact on the monthly figures. So there's unlikelihood that the first quarter you'll have any reduction. In fact, it may go up. Then the next quarter, we've got the elections coming up. So that'll have a play, regardless of whether we think it will or won't, it always has a play. So already we're talking half the year gone. And if things don't improve from a cash flow point of view, from a cost point of view, it will start tapering down towards the later half of next year. So there's a very strong case of saying that there might not be a cut, or if there is a cut, we're talking in the second half of next year, and it may just be the one cut to just change the perception of people to get them to start spending again.
I agree with you. I think that's pretty well considered. And you know what? If we're wrong, what's the worst that can happen if you do get 2 rate cuts? If you're planning for no rate cuts,
Yeah.
you're going to be in a much better position.
That's right.
And that's how I'm doing my planning. I'm not assuming any rate cuts at all. And I preface that by the point of saying, even if the Reserve Bank of Australia chooses to cut rates,
Banks might
that
not pass it
doesn't
on.
necessarily mean that you're going to get that passed on. Or if you are, you're going to have to refinance, or you have to fight tooth and nail with your bank to get that passed on, because that the banks, lenders are going to have a rhetoric of going, well, our cost of funds hasn't changed, so we're not moving at all on it.
So here's a hot tip. Why don't you negotiate with the bank right now? So if there is a rate cut next year, you already got a reduction, and then you'll get a further reduction, likely to get a further reduction at that point in time.
There you go. You've got to do the time, do the effort.
That's
right?
right. Yeah. So if you're talking external factors, right? So if I'm waiting for next year for the interest rates to come down, so I'm making less repayments, so I can then start investing because it'll be more affordable. What if we looked at it from a non-standard approach? Still very guided, but non-standard approach of saying, okay, we know that the interest rates are going to come down in the next, let's say, 24 months. We know that the market will become absolutely frenzied and will track upwards significantly when that does happen. What if we, under good financial advice, took a little bit of our equity to help hold on to that extra buffering for the interest rate and got into a property now, so that we could ride the wave up, still be within our means, but this is where you're actually using your external factors and reading the room and saying, yes, it'll go up, so I'll take that measured risk to actually get into property to track the market upwards.
I think that's fair, but you got to be considered. It's your decision to do it. Make sure you do the maths. But everyone gets absorbed with comments about all the what ifs and what are these external factors. External factors you have very little control over. But sort of specifically talking about the market, I caught up the other day with a shared property colleague of us, Munzrul Khan, and he's as active as ever in real estate. But I wanted to pick up a point he said, and I want your view on it because I know you're highly engaged right across Australia on this. He reckons that chatting with agents in certain pockets of Sydney, people are actually hurting.
They are hurting, absolutely.
People are hurting, and people are having to sell, whether investment properties or owner-occupier. And some of the commentary I see coming out of the market in general, we'll talk Sydney, but you're seeing it elsewhere, is that vendor expectations are still high. People are either pulling properties from the market or not getting what they want at auction, so they're just going, it'll be all right, I'll kick the can down the road. So these people that don't have to sell into sort of February, March of next year. So there's going to be this glut of properties on the market. Are we going to be moving into a real positive buyer's market for real estate investors into next year?
Yes, we will, unless there's a rate reduction. Then it'll flip very quickly.
So this is the point. So you've got a moment in time between market dynamics. It's a buyer's market.
Yep.
As soon as there is a sentiment shift, which is going to be triggered, well, the flashpoint will be an interest rate cut, even though there's only one.
Even if there's only 0.25 or even 0.1, right? It's just the movement of interest rates. So people think
They wouldn't cut at 0.1s.
I don't
something.
think so.
No.
Yeah, I don't think so.
So that's the sentiment. So it could be now time.
Yeah, now's the time. But let's say, okay, May, June, July may be the rate cut, right? So you've got the first half of next year that is really good buying. You've got people that have been kicking the can down the road in terms of affordability and holding onto the property, and now they've run out of road.
That's right. Yeah. So their expectations is going to change over time. If that hurt becomes more hurtful, they're going to start taking prices, and that's when you see negative pressure on them.
And then you've got further mechanics of you've got the expenditure over Christmas, right? So generally, and this is human nature, right? So when people are in financial strife, when they're starting to see that tight cash flow happening, that tend to overspend over Christmas or the festive season. There's one last hooray. Right? Okay. It's sort of like burying their head in the sand. Seen it multiple years, seen that. Yeah. And then the credit card bills start rolling in, and they realize, hang on, February we're expecting a rate cut. It hasn't happened. There'll be a glut.
But also to put in the perspective, rate cuts and acknowledging that there is different aspects of society who are doing really tough for different reasons. But we're talking about property investment. A 25 basis point cut
doesn't make much of a difference.
Probably ain't going to make that much difference for a property investor.
If you're already in trouble, it's not going to make a huge difference, right? So if you look at it for every $100,000, you're getting what? $25?
Yeah, for every 100, it's 20. That's all it is. $25.
Yep.
Yeah.
So if it's $1 million,
yeah, it's $2,500 a year, right? Yeah.
It's not going to make you, laugh all the way to the bank.
Yeah, and this is the inflection point also with, external circumstances and factors. If there is a trigger for interest rates to come down, I think all property investors, and again, considered and measured commentary around property markets, which I think, we delivered well over the COVID period. Don't expect interest rates to go back down to where they are. And I think a lot of people are still subscribing to this idea. Your interest rate for the foreseeable period of time, even as and if and when rates start coming down, it's going to be starting with fives if you're a property investor.
Yeah, we have to remember that there were emergency rates, right, just to keep everything moving because there was no employment or you're not you couldn't come to work, and they tried to keep the economy from absolutely tanking, and that's why they dropped it. So encouraging people to spend money, and I doubt we will ever see it in our lifetime unless COVID happens all over again. And I think if COVID happens all over again, we'll do it better.
Yeah, I think most people go, oh, here we go again. Yeah, no worries. But that's really good. So hurdles can be overcome, Reshmi.
Yes, absolutely.
Yeah. Considered, measured approach, and understanding, like one of the key things that is that you have to understand how your decision-making process is, and seek help from external parties. Get a team around you.
Team's important. Do you guys think your decision-making process has evolved much over 25 years investing in property? I imagine you're probably a lot more decisive.
One of the things I wanted to say is buying property, when we see a good deal, we don't always have to buy it. So that's been one of the key factors in our decision point as well. Because we're building a portfolio, right? You've got a great opportunity to buy this wonderful property, good returns and all that, but is it really going to do much for your portfolio, or is it going to be a negative impact on the portfolio? So we can elaborate a little bit more on that. Remember the properties we left, we didn't buy because it's like, but it's a good property, right? It's making this much money, there's this much yield in it, but then, but it's not suiting what we're trying to do.
Yeah, that's again, that's around your sort of strategy and goal setting. That's one thing I'm pretty good at. I go, nah.
Yeah. And I sent a few properties your way where it was sort of there, but it wasn't in line with your
Yeah,
goals.
I'm good with no. You know,
Yeah.
a lot of people aren't.
Yeah.
You know,
No.
but collecting properties just for collecting property's sake is probably
Yeah.
not very
It's probably
strategic,
not,
right?
yeah.
But you must know a lot of people like it. They'll buy anything.
We did that before
Yeah.
ourselves. Like we were buying just because, again, with clarity, we didn't have as defined a methodical approach to buying our properties. So whenever we saw a good property, we'd buy, right? And so that's how we ended up with quite a bit of a negative in cash flow, like
Yeah.
not having the finger on the pulse, as I said in the previous podcast.
But
right?
but to be fair though, that's been forgiving for you because what you're saying there, because it was a good property, might not have been ideal for the moment in time in that
No.
situation. However, it was good in that it gave you
Yeah.
ability to
And
either
remember, we started buying like I was in my 20s, early 20s. So we had lots of time. So yeah.
You still got heaps of
Age.
time. Still got another couple of decades for these portfolios to keep growing and
Yeah.
evolving. But so we're going to get together one more time
One more
before
time,
the break, and we're going to go through this goal setting
Goal setting, amongst
logic,
other things
amongst
as well.
other
yes.
things as well. Yeah. Anything else happening? So are the team still
Still firing ahead.
still at it?
Still,
Firing
Yeah.
ahead,
Okay.
We're getting some fantastic results for our clients.
Okay.
But it is at this point in time, it does become harder to find the. It's harder to divorce the frenzy from the fundamentals. So we have to take a slower approach, but at the same time not miss out on the opportunities because we've got all the Christmas parties happening. Contacting clients overseas, all of those things, but. We've got a methodology around all of that, having done it for many years.
Yeah, good. Secret sauce. So track you guys down. Best way, social media, right
Or
property
could
group.
jump onto the website.
As well.
Yeah, okay. All right. Well, thanks, gang. Thanks for coming in and
you.
sharing those insights. It's so what we spoke about there, and have a think about this when you're sort of musing and lost in thought around investing in property, when you sort of, your attitudes and approach to dealing with hurdles and obstacles will be the key way in which you can maneuver or manage your way in and around or over them. So have a positive attitude towards hurdles and obstacles because you will face them. And if you're able to be proactive and positive and have the tools and the trappings in order to be able to navigate them, you're going to do a lot better. But we spoke about lack of clarity and consistency and how to combat and maneuver around those external circumstances. So some food for thought there, and go back to them, and should help you pick your way through it all. That's Reshmi and Victor Kumar from Right Property Group. Go and check these guys out. Right Property, RIGHT, propertygroup.com.au. We can get them, or always track them down on social media. And there's some really good stuff there as well. Any more Right on tracks
Not this year.
Oh,
Start again next year.
Start next year. So, all right, watch this space. We'll let you know when they take place. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.